Good morning. I'm making this video today today being the 16th of April. This video should have been made yesterday. It's preoccupied with some things. So let's dive right into it, starting from the dollar. So we are still bullish for the dollar. So taking this all off. So so from the weekly time frame, this is our John. This is our John liquidity long term. This is our John liquidity long term. We went into Monday's trading expecting higher prices for the dollar, even though I would like us to range in this mitigation block for a little bit, then form the high on Thursday. Thursday's high of the week for the dollar should form on Thursday, then drop lower on Friday. That's why I want. That's the narrative I'm looking for this mitigation block to play out before trading up into this buy side liquidity next week. But it can still do that this week. So that is still on the table. So let's look at the 1 day. We'll not spend much time here on the dollar. So as you can see, this is a high resistance liquidity one because there is back and forth price action inside of here. So it will take price. We need something energetic to take price to take price higher. So this is why I'm expecting a little bit of range price action in the mitigation block before going higher. The mitigation block on the weekly time frame before going higher. So on the 1 hour time frame, this is when we got our draw liquidity for yesterday's trading. So yesterday is being Monday's trading. This so this is Monday's trading. So we are bullish for the dollar. So when you see before midnight, sorry, after midnight opening price. After midnight opening price, this is during which the market makers determine the low and the high of the trading day, of the current trading day. So this is the midnight open. Let's make this good. So this right here is the midnight opening price, 9:30 opening price for equities. I think there was a high impact news on yesterday, but that's by the way. So our general liquidity, because we're expecting higher prices, any drop lower is being seen as a manipulation drop. So we want to see that drop act as a manipulation phase. So that's what occurred here. So after midnight opening price was dropping. It was dropping, allowing buy side engineering buy side liquidity above here, which are relative equal highs. So this was our jaw for yesterday. And something about jaw is that you're expecting price for your jaw and liquidity, you're expecting price to trade to it and through it. So it's expected that price should go higher than that to take out more buy side, but you do not need it to get higher than that for stability. You just need to know where the jaw and liquidity is. Especially if you're not trading the dollar, you're using it as a barometer for the indices and the forex market. So let's continue. So from the 15-minute time frame, So after the 8:30 news embargo, after the 8:30 run higher, we expected this job down to be a reversal leg. So if this from iStickon content month one, element of a trade setup, there are four elements of a trade setup from consolidation to expansion, then retracement and reversal. So currently we have we had a consolidation which was consolidating lower. So took out sell side here before midnight opening, before sorry, before the opening price for 8:30 a.m. So sell side took out sell side here. So took out sell side here. And this last down close candle, this set of down close candles was seen as the bullish order block because of this quick rally higher after taking out sell side. So this right here is a liquidity purge. Liquidity was purged on the sell side because higher time frame narrative is bullish on the dollar. So I'm mixing two videos in one, which is a market review of yesterday's transaction and diving into liquidity, the differences between liquidity purge and liquidity strip, and why it's relevant in generating narrative while trading. So when a liquidity purge is seen like this, where it's expected that every rally, every drop lower into downward candles should be seen as a retracement to an order block or a fair value gap or an optimal trade entry, which will be used as a reversal because we had a consolidation here, price broke down here, and we had an expansion leg higher. When this expansion leg higher took place, it left a bearish order block here and a bullish order block here and a bullish proportion block here. So I used this bullish proportion block for yesterday's bullish order as a bullish order block, this proportion block here, which is the bullish order block here. So you can still take from this bullish order block here, but because I was expecting price to not trade below here, so here was my invalidation point. So any drop below this, any close of price action below this low here will be seen as um, problematic for the ongoing price action for the ES and the Nasdaq. So when we had the rally higher after the consolidation, we had an expansion leg higher. So when an expansion leg is made and you're expecting a reversal, price generally reverse to the other block at a discount level or the fair value gap at a discount level. So we came down to the other block here, which a 15-minute fair value gap is resting inside here. So from the low, from the low to this high, from the low to this high, year to year, we expected price to trade down below this below the equilibrium point to a discount PDRA to go to premium, because that's what we do. We trade premium to discount and discount from discount to premium. So this is what we did. Price traded inside of that bullish proportion block, which is inside of this bullish order block. As you can see from the 5 minutes, the order block is seen clearer here. The last set of down close candle before the bullish move higher. So this is a bullish order block in the 5 minutes. As you can see, the last set of down close candles for the move rally higher. I don't think I covered much on the other block on the last on the first video. But it seems I was trying to push out that video fast, like I'm doing currently now because I'm Um, I'm back on time. So let's just continue. We'll talk a little bit more about other blog because there's more about other blog. There's something that was going on right inside of here. So the narrative needs to be transferred, like it needs to be explained in a real detailed format. So we dug below the midnight opening price at a discount PDRA, which is below the 830 opening price. So you mark out the 830 opening price, which is here. So you mark out the 830 opening price, which is also at a discount from this range low to this range high. So we had a dug into it and price traded back to the so it's buy side liquidity after pairing this sell side liquidity, which is the market efficiency paradigm. So let's see and get on going higher. So let's see the ES 500. So start from the daily. So for the ES, we've been bearish because we are bullish on the. Let's take this all off. For the ES, we were bearish. The other flow from the high time frame has been bearish for us here for the past um, let's say for the past 5 weeks. We've been expecting lower prices to going into April. So because our order flow is bearish on the lower on the higher time frame, every rally higher we see that as a manipulation leg going higher. So let's talk about liquidity purge and liquidity sweep. So what is a liquidity? Liquidity purge is when price goes to a pool of liquidity to pair those orders. Let's use a for a binary narrative. When price goes to a sell side liquidity to pair the let me be marking the when price goes to a sell side a pool of sell side liquidity to pair the resting sell orders there. And smart money will use that sell orders, those resting sell orders that are resting below the sell stops. Smart money will use that as a counterparty to pair their order, to pair their buy order for going for higher prices, which will be offloaded at a pool of nicer liquidity. Now, the difference between this explanation and the difference between the liquidity purge and the liquidity sweep is that the liquidity purge is a vector quality. So when you say vector and I'm using physics, a little bit of physics. Whereas the liquidity sweep is a scalar quantity because it is not based on the directional flow, that is the higher time frame order flow. The liquidity purge is a vector, it's a vector because it is directionally biased. So when a pool of liquidity is taken on the sell side, for example, and we're expecting higher price action, and when order flow in from the higher time frame is bullish, when sell stops are pushed, it is seen as being in line with order flow because we do not expect that sell side liquidity should be traded to and through again. Should expect price to change to the opposite price action of that sell side liquidity push that has occurred. So let's use this as an example. So you see the difference between the liquidity pull and liquidity sweep. Liquidity sweep is like a plot twist inside of the bar time frame to manipulate you price is has made a low. Let's say it will be easier for me to show illustration. So this is our sell side. This is the relative equal lows we are joined to on a longer term basis. This is the relative equal loads we're joined to. So we've got this, we've got sell side here, we've got sell side resting here, which are relative equal loads, which is why price came down here to trade to the sell side liquidity, which is resting here and trade. So continue. So for the 1 hour time frame, because we know that the high time frame for the next for April and May is typically bearish for the indices market, where because of a bullish dollar, every time price rallies higher, we see that as a liquidity purge. We see that as price purging buy side liquidity, which will be later paired with sell side liquidity at a future time in price. So we do not expect that buy side liquidity that was purged to be traded back down into. We do not expect it. So let's say this right here, which is a liquidity purge. This right here is a liquidity purge because it is in line with higher time frame narrative, which is bearish for the indices. This also is a liquid. This also is a liquidity purge. So when we have a liquidity purge like this, price typically creates a liquidity sweep, which will be used a as a manipulation to trade to engineer more sell side liquidity. So engineer more sell side liquidity from the uninformed market participants. Because when price took out this, like after the liquidity purge is traded to yeah, and price has paid buy orders here, we do not expect price to trade back above this high again. So we expect the maximum price should trade to is this set of last uplift candle, which is the bearish order block here. So price created this sell side liquidity here. This is narrative, so pay attention. So when price created this sell side liquidity here, when price created this sell side liquidity here, this now will be seen by SMC traders or traders that trade patterns for pattern sake. They'll see this as price making a low here that we are now bullish, forgetting higher time frame narrative that we have switched from a bullish perspective to a bearish perspective since the beginning of April. So they are not in line with order flow. So they'll think this is a fake out now. They'll say they'll label this a fake out. So this will lure in fake out traders to chase this rally and put their stops below this low, which is which is engineered sell stops. Yeah. So sell stops will be resting below this low. Yeah. Now when price opens for the new week, which is for the new day, which is Monday's trading. So so here is a liquidity sweep. So liquidity sweep is a manipulation led in price action. When a form of liquidity has been paid, price still be interested in that pool of liquidity again. When price is still interested in that pool of liquidity. So this right here is a liquidity sweep. So as you can see, price took out this relative equal of here and around higher going into Monday's trading. But because we are still interested in lower prices for the ES, this right here is seen as a manipulation to make traders their sales stops below these lows that was created here. So let's continue. So this what it is. This was the sell side that was created. So let's go to lower time frame. How this narrative is being used. It's, so you want to take the range of the down. Talk about that next time. Let me not put too much here in this group because it's too much overwhelming. I'm talking too fast. So for Monday's trading, this was the Monday's opening price, and this is the Monday's closing price. So what did you have here? So we have buy side liquidity resting here. Buy side liquidity resting here because this, as you can see, this is relative equal highs. So when price is running, when price was dropping, the people that took someone that took sell position here would have adjusted their price, their stop loss to here, and here. So because we do not expect price to change, we do not expect price to be extremely bullish. Every rally that is going up, we see that as a suspect rally. That is a form of manipulation. And you should be aware of manipulation. You should try to always anticipate manipulation in price action. Without manipulation, you do not trade. You wait for a manipulation. You want to see someone being on the wrong side of price action. You want to have your sword sharpened, waiting for the uninformed speculative money to willfully lay their necks on the market for us to capitalize on. Does that make sense? So you want to be patient, wait for a time of trading, wait for a Q zone. That's why the Q zones were created. So back to price action. So there's buy side liquidity resting here because the sellers have adjusted their sell stops, their buy stop, sorry. So there's buy side liquidity resting above this place here. So there's buy side liquidity resting above this place. So when price made this rally here at 8:30, we noted that as a suspect rally. We noted this as a suspect rally, creating going up to purge out this buy side liquidity. So this currently now is a liquidity purge to the buy side. So this liquidity that was purged, this pool of liquidity that has been purged on the buy side, what should we expect in price after taking out buy side liquidity? After a buy side liquidity purge, we should expect a sell side liquidity. We should expect price to trade into a pool of sell side liquidity, which is that exchange pattern. Um, every time we trade, you should always have the concept of the market exchange pattern in the back of your mind. It should be something that is engraved in your thinking. It's like there's a video that's making rounds online about two women that sells egg. So one had to lower her prices because she saw the other people lowering their prices. So she lowered her price with them with the other person that lowered her price. So when she did that, the smart money in this context lowered her price again to make that dumb money in lower price also to think X are worth less than the price is actually worth. So when she lowered her price, they brought it up. They brought it up. Let's use this. Let's use this. So the X price were this low. The smart money made it lower again to make the dumb money sell at this price. So when the dumb money sell at this price, the smart money egg seller bought up the eggs from the dumb money and price rallied higher. And the smart money egg seller in this thing bought more eggs and raised the price to an higher number. I think the price was about, let's say, $1 before. When the smart money has already manipulated the dumb money egg seller to sell a price for a lower price than it is actually worth. Then she bought up the smart money egg seller bought up the eggs from the dumb money and raised the price to about, let's say, $20. So from $1 to a $20 raise, that's how many percent increase. So this is how the market works. This is how the whole system is made. So this liquidity here was pushed to the buy side, and on the 5 minute time frame, we had a fair value gap here. In the 5 minute time frame, let me take this liquidity port out. Okay, no need for this. From the 5 minute time frame, we had a fair value gap here. After I built this market structure, so this is the 5 minute fair value gap here. As you can see, it was going higher, running up. Price was going up, running up, and broke this um, market structure from a buy program to a sell program. So it has changed from a buy program to a sell program here. So your stop should be above these highs. Your stop should be above these highs. Your entry should be inside of this fair value gap. If you're using the fair value gap entry, this. If you're using the other block entry, see price trade to this other block, to the bearish other block, which as you can see is the last up close candle when it was in a bullish um, program. This is the change in state of delivery. When price broke down here, this became a change in the state of delivery from a buy program to a sell program. So traded back inside the year and entered a short here, trading below the sell side, the 830 opening price, and also below the midnight opening price, and also below the midnight opening price. Yeah. So as you can see, this is a sell side, this is a liquidity sweep, the sell side. So this is a liquidity sweep on the sell side. When price this liquidity sweep, and retail traders will see this as I was taking out sell side. So it should be automatically interested in buy side. Maybe yeah, or maybe they're still bullish. So their their stops will put below this low typically below this low or lower or anything like that. So price will treat them like it's going higher. Now they'll see this manipulation leg now as the original move in price, trying to fill up this gap or going above this. The price went above midnight opening price and boom, everything went lower to the sell side here from this place here, which was the 5 days low, as previous days trading low. So this low also here, which was resting in the which is the sell side liquidity flow from the daily, and also this low, which is 55050.8, which is the drawn liquidity. Uh, you know, so going into today's trading. So I hope you got something from this quick video. If you did, and drop a like so I know you guys are watching to this point in time, and I'm not just out here blabbing. So thank you for watching. Have a nice day.